I'm gonna make a lot of money because today I became a crypto trader. Investing? For what? Why would I invest in stocks and real estate when I can be a crypto trader? I can make money right now. I'm gonna become a deca-millionaire in 1 week. That is why today I will use all of my savings to buy this new cryptocurrency, the Kitty coin. One of my colleagues made 10,000 bucks by trading Kitty coin yesterday, and I'm going to do the same. Prepare the champagne and the limousine.
The next day.
Let's see how is the Kitty coin doing.
Kitty coin crashed. You lost everything. You have to live in your mom's basement again. LOL.
Oh no, man. What the f? Does that sound familiar to you? Usually, when you watch a video about investments, you receive a couple of tips and you hear about a couple of assets that you should buy. But what happens when we take that logic and flip it? What happens when we take the negative approach? What happens when we focus on the assets you should never buy? That's exactly what we're going to do in this video. In this video, we're going to talk about the 4 assets that you should never buy. Let's dive in. Before getting started, don't forget to hit the subscribe button down there and activate the notification bell to never miss a new video. The number 1 asset that you should never buy are binary options. You see all those fancy advertisements where somebody who was a bus driver yesterday became rich overnight thanks to binary option. No, not rich. They became millionaire. No, not millionaire, billionaire. But don't be fooled by such a deceitful advertisement. Let me explain. Binary options are fairly simple. You buy an option with a given underlying asset. It can be a stock, a commodity, or whatever. And then you have what it's called a strike price. If the price of the underlying asset is above the strike price in 30 seconds, 1 minute, 2 minutes, or 10 minutes, well, you make money, a fixed amount of money. And if the price of the underlying is below the strike price when the option expires, well, you don't earn anything. You bought the option for nothing. For example, imagine that you buy a binary option that will expire in 3 minutes. The underlying asset is Apple stock. The strike price is $1,000. The price of the option is $5. And if the price of Apple stock is above $1,000 when the option expires in 3 minutes, you're going to make $30, which is a net profit of $25. However, if the price of the Apple stock is below $1,000 in 3 minutes when the option expires, you don't earn anything. You lost $5. Do you smell that? It smells like gamble, but they put some investing perfume on it so that it doesn't smell as bad. The thing is, those options are very short-lived. They typically expire in a few minutes. And the evolution of the price of a stock, a commodity, or whatever in a few minutes is completely random. You cannot forecast anything. With some analysis, you can make a forecast whether the price of a stock is going to go up or go down in the long run. But in the very short run, in a few minutes, it is completely impossible. That is why it is completely random. So you're paying money to make money in the future depending on a random event. Well, Mrs. and gentlemen, this is called gambling. I don't have anything against gambling. I don't like gambling personally, but whether gambling is good or bad is beyond the point of this video. But what is really bad for sure is when gambling is confused with investment. The bottom line is, never buy binary options when you want to invest money, because it is a complete gamble. And if you want to gamble, that's fine, but I personally think that going to Vegas or to the casino to play cards is much more fun than trading binary options. Going to the casino.
Let's play some blackjack!
Going to the casino versus trading binary options. Lots of fun. In fact, you shouldn't be buying options altogether, even normal options, because they are lousy investments most of the time. But that's another topic. The second asset that you should never buy are commodities, because commodities are actually liabilities. Yes, commodities are actually liabilities because they only incur expenses, just like a personal house. For example, imagine that you buy 1 ton of copper on your computer. Well, you're now the owner of 1 ton of copper, and now you have to pay for storage costs every single week. And those costs can be pretty high. And you only make money on copper when you sell it in the future. Maybe, I hope so for you, for a profit. But you have to remember the definitions of assets and liabilities. An asset is something that puts money into your pocket consistently. A liability is something that puts money out of your pocket consistently. And commodities, for instance, put money out of your pocket consistently because of the storage cost. So, commodities are a liability. But don't worry, there are solutions. If you smell that the price of copper is going to go up in the future, you can invest on that trend indirectly. You can invest in stocks of companies that are into the business of copper, either mining copper, processing copper, or trading copper. So if the price of copper goes up, automatically there's a very high chance that the price of those stocks will also go up. You can also profit from the fact that those stocks will put dividend money into your pocket. Those are real assets that put money into your pocket consistently. You can also invest in copper ETFs. Those are like mini funds that invest only in copper stocks. By investing in an ETF, you reduce the risk of picking the wrong copper stock. The price of the wrong copper stock can go down because it has bad management, employees went to strike, it had an accident, or whatever. ETFs reduce that risk. The third asset that you should never buy are CFDs, aka contracts for difference. Contracts for difference are very simple. Your broker lends you money to buy more of a certain asset. For example, imagine this. You have $1,200 to invest and you want to buy Apple stocks that are worth $1,000. Normally, you could buy only one stock of Apple. And then comes a broker and he tells you, hey, I'm going to lend you $9,000 so you can buy 10 shares of Apple instead of only one. It means that if the price of Apple goes up by 10%, well, you're going to make 100% profit on your money. That's great, right? Well, that may sound great only if you forget something. Only if you forget interests. And yes, as you can imagine, the broker was not going to lend you money just because he's a nice guy. He's going to collect interest every few days. A pretty high interest rate, which makes it impossible to hold CFDs for long term. So you have to adopt a short-term strategy, that is speculation. If your broker lends you 10 times the money you already have, that is a leverage of 10. In the case of CFDs, the leverage can be 2, 5, 10, 20, or even 200. But here, let's assume that the leverage is only 10. If the leverage is 10, it is enough that the price of the stocks that you bought with the CFD go down by 10% to be completely wiped out. It is 100% loss. So there you see, CFDs are very risky. They are a fake asset because they take money out of your pocket consistently because of the interest payment, and they can completely wipe you out very fast. CFDs were made for very impatient people who do not want to get rich slowly. Those impatient people prefer the option to get poor fast. Great! When we look at the statistics, the overwhelming majority of the people lose money on the short term. And on the long term, it is even worse. We're close to 100% of the people who lose money. In general, you should avoid CFDs and any other leveraged asset, that is when they lend you money to buy that asset, real estate being the only exception. Because the real estate is actually generating money for you with the rental income, and you can pay all the interest and the mortgage payment with that rental income. That is why real estate is the only exception. It is the only leverage asset that you can buy as an investment. All the rest, like CFDs and so on, are speculation/gambling. There is an old saying by an old investor that says that the 3 L's can make you broke: ladies, liquor, and leverage. And by ladies, I mean ladies that work for a fee, if you see what I mean. And for the same reasons, don't buy leverage forex. I have done that myself and I lost everything, despite the fact it looked stupidly easy to make a lot of money. Besides, owning currencies have always been a very bad business because of, well, inflation, once again. All of that leads me to the last asset that you should never buy: shitcoins. And when I talk about shitcoins, I'm talking about all cryptocurrencies. Yes, all of them. Because think about it, cryptocurrencies are even worse investments than traditional currencies because crypto is much more volatile and it doesn't bring you any kind of interest. And when you combine the fact that many people who buy crypto buy it with leverage, it means that you take all the disadvantages of CFDs, all the disadvantages of currencies, and you put them together. It's like a fusion of bad investments. I'm really gonna make a lot of friends with that video. Because of all those drawbacks, I cannot consider crypto to be a good investment. I talk more in detail about this in this video. Let's conclude this video with an investing principle, which is avoid speculation. Speculation only focuses on price and builds your wealth in only one way. That means we can use the wealth building scanner. I know that you missed it. When we look at the wealth building scanner, speculation builds your wealth in only one channel, the price appreciation channel, which is also the most uncertain and unpredictable channel. When you're investing, you should look for assets that at least builds your wealth in the cash flow channel and the price appreciation channel, but not the price appreciation alone, because that would be speculation. You can speculate if you find that activity entertaining, but remember, the odds are completely stacked against you. Speculation is something very close to gambling, and as such, you should only use a portion of your money to speculate. If you want to build solid wealth, you should take all the rest and invest it, not speculate or gamble with it. And most people speculate when they think they're investing because of that old and misguided statement, buy low, sell high. Buy low, sell high must be one of the most misunderstood statements in the planet. Smart investors do not focus on that. Write this down. Mediocre investors try to buy low and sell high. Smart investors buy low and collect passive income. So remember this, when you're investing, focus on passive income. Focus on cash flow, not on buying low and selling high. That's it for this video about the assets that you should never buy. I hope you enjoyed this video and learned something from it. If that is the case, a little thumbs up is always appreciated. Do not forget to hit the subscribe button down there and activate the notification bell to never miss a new video. And I will see you very soon.